to identify good, healthy opportunity in the market. So let's see here. We got TOS opening up here. Let's get it for a minute. Um, Now, if you look at the other one here too, this one wasn't that much of open print, but just notice here how this strong buying comes into the market. We get a very strong push. We got pre-market high right here as well. We get a nice red bar that gets ignored off pre-market high. Pretty healthy moving averages. This is the inevitable. But this weeds out the traders that aren't here for the long term. If you can't take a loss and sustain it, then this game's gonna be very hard for you. And I always talk about that so much because that was literally like I used to struggle with that like crazy, dude. Why is my thinkorswim? Sometimes Sundays thinkorswim can get a little funny. All right, here we go. But we're open. Let's get into it here. Maximize sell. Here we go. I got my pit numbers up right here. All right, let's get straight into Monday's price action. Monday, that was literally the day that we were just looking at right there. So check this out. Monday morning opens up. Now, you guys know I treat every day the exact same, okay? Market opens up. I'm looking to identify who can control the open. We do this by spotting our three-step approach. Open print, moving average cross, RBI, GBI, okay? So open print's established. We get a green bar ignored, okay? We don't go short, but why? Well, for starters, the moving averages haven't crossed yet, okay? But this is a very large red candle, and look what happens right after it. This is why it's very important just to accept the fact that you might not know what's going to happen, and that's okay, right? Like, when you see something like this, you're like, oh my God, the sellers just owned open print and I missed it. Or, that's one perspective. The other perspective is to go, this is garbage. There's nothing here for me yet. Yeah, there's a large red candle, but what am I going to do? Get in right here and hope it continues? No, that's not repeatable. Notice how it comes right into the 1 hour 9 and we get a candle to the upside right here. Cool. Now, I'm not getting in long on that either because there's no proper place for me to put my stop. So this is unhealthy unhealthy price action. So we have our orb and I draw a box around it. Okay? So we now have our box around orb. And notice here how we use our tools to execute only right here. I literally get into the market right here, and it's literally because there was no healthy opportunity until then. Price is moving, but we don't need to participate. There's nothing here. Yes, it's bouncing off the 1 hour. It's bouncing off the cloud. It's Monday morning. I want to make money. I've been waiting all weekend. No, stay patient. We come into end of day. Sellers show strength. Not enough strength though. How do we know this? Because there's no moving average cross. So once again, the 3 steps is protecting us. Now, price is respecting the 1 hour. It rallies into end of day. The 1 hour sucks up close to price. This is now healthy opportunity. We get a very nice retest of the orb. I don't get an RBI here, but I get in the market long. Why? Well, it's actually quite simple. The moving averages were telling me this was healthy price action, and I was willing to put my stop below this candle. Now, this doesn't mean completely neglect the RBI, GBI entry criteria. But what I'm trying to tell you guys is the goal for, like, the reason why we use all these indicators and tools is to identify a healthy opportunity, to understand the story of the market. And it might not be right now, but down the road, you're going to be able to make trades and understand things when all the stars aren't, like, our job isn't to align every star that we know, right? Like, that's not my job. I used to be like, oh, I need everything to line up perfect. Next thing you know, I make no trade, okay? The goal is to understand, hey, buyers have owned this. The 1 hour trend tells me we're going to get a continuation here, possibly up to previous day high, which we ended up getting. So I was willing to take the market long on this healthy trend right here. And we caught a really nice move. It was like 60% ROI. It was beautiful. And, once again, if you just highlight your RBIs and your GBIs, you'll notice here, they tend to be respected. Okay? So we grab that move right there. And then price comes back into the 1 hour. and we get healthy buying here out of the 1 hour trend and off end of day. So once again, using the pit numbers, using the moving averages to identify healthy opportunity to the upside. Okay, and then we just kept getting an RBI here, healthy 5-minute trend. So like the way I like to look at it, and one thing I want to do going into this week is use your 1 hour to establish like the ultimate direction here. Trade with it, right? I don't often want to be trading against that 1 hour trend, and then play into your upside pit number. So that was Monday. Tuesday was a bit of a mess here. What trade did I take? Oh, I took this short right here. Todd, is there anything else you want to talk about on Monday?
No, you pretty much hit it on the head for me.
Okay.
If I could point out something,
yeah,
that's why I don't trade the orb breakout, because you would have got smoked right there. You wait for the retest RBI at that level, and you're good to go.
Thank you for bringing that up, bro. See, you'll see online a lot of people like the open range breakout where they enter when it breaks out. See, one thing I'm realizing is that's not, I mean, yeah, it works, but it only works when the 1 hour is close, okay? This is important to realize, right? Notice every trade we take that's successful, notice where the 1 hour is. Like, look at this trade we took Tuesday. This was a banging trade. Look at this short play we took. I didn't trade any of this. I took a short right here. And look where the 1 hour trend is. It's on price. Now, I know not everybody has, 5 hours to not do anything in the morning. But stay aware of where the 1 hour trend is. Like, look at this one. RBI, right? We got a moving average cross, red bar ignored. This was our setup right here, okay? Now, say you missed that short play. I didn't take that short play because how close the target was. Look what happens when price comes back up into the GBI. GBI, reject. So, like, when I see this, I go, this is bearish until buyers get above this GBI. And they couldn't. Price came into it, reject, reject, reject. Then we get another green bar ignored right here. I didn't short this, though, because of how far away we were from the 1 hour. Once again, that would have been a good short, but I like to target the critical level, which is down here. And I understand when you're this extended from that 1 hour, you're going to end up getting a pullback. All good. Know what we do? We draw a box around it. And then what happens? We come back into the level. Okay? Now, don't just see this and go, oh, green bar ignored. No, we don't want that. We want red bar, green bar, red bar. Okay? Red bar, green bar, red bar. Boom. In short right here. Stop above this green candle. And this trade was a monster. Easy, very simple trade. But notice, guys, like, look at this. That's why I tell everybody in my mentorship, draw a box around every RBI, GBI you see and never trade against it. Look at this. Sell off, comes into it, retest, 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 sell. Right? Like, this is how we understand the market context, which is very important. Okay? You don't want to catch yourself going long down here for some retarded reason. Right? Understand the context and trade with it. 9 times out of 10, it's just going to serve you exceptionally well. Like, look, you literally green bar ignored off the 1 hour, off EOD, right? And then green bar ignored here again, off end of day. Beautiful. I took one trade Tuesday. One trade. That was it. In and out. This day was a mess. Complete and utter mess. Just garbage all over the place. I took a short play right here, and I'm not mad about it whatsoever. I think this was, this met all my criteria. We literally got a moving average cross, a green bar to be ignored. We were at the 1 hour trend, okay? There was just no continuation, okay? Does a king always work? No, it doesn't. But it does work 80 to 90% of the time while playing blackjack. So I'm going to still bet on the king. I'm going to still trade my strategy. This one just didn't have any continuation. Stopped out of it exactly where I was supposed to. Then I was looking for another long play, all right? We got a moving average cross. I'm looking for an RBI, and this is what we get. Massive sell-off. Now, what happens when you see this, okay? This is very important to talk about. When you see a very large move, you need to program your mind to go, this is not healthy. There's no opportunity here for me. That doesn't mean that you can't get in quickly and make $1. Okay? Like these are the things that ruined my first couple of years as a trader. That's why I always talk about them. When you see a large red candle, yes, you can get in here and hopefully get out here. And it's very easy to look at this and assume that you could have done that. But the reality of the situation is, in the present moment, you have no idea how far this is going to go. Therefore, there's no structure. You're very extended from your moving averages. This is unhealthy, irrational trading. It's never going to make you long-term money. It may get you lucky. You may get lucky on one of these and hop in a 10-pack and make a quick, 2-3 grand getting lucky. But what's going to happen is you're going to reward yourself because you're going to make money by doing this. Your dopamine's going to release. You're going to feel good. You're going to be happy for making a stupid decision in the market. And then you're going to do it again tomorrow. Or maybe not tomorrow, but the next day. And then you're going to find yourself with inconsistent results. So it's best just to wait. Wait for a price to come back into the moving averages and just trade your strategy. Okay? So when I see a very violent move, I go, all right, I'm probably not going to trade for the next hour. But all these rush traders are going to give me great opportunity. Okay? That's exactly what happened. I think we had Powell speaking or Trump or someone was, manipulating the market here. Definitely a lot of manipulation going on right here. And I don't want any part of it. I don't. Until I get a moving average cross at a critical level. We get a nice red bar right here. Actually, I want to talk about something. All right, so we sell off, okay? This is wild sell-off. Let me get rid of some of these. It's just too much. Okay, we get a wild sell-off. Okay. All right. And now price is sucking up. This is the snapback. Snapback means when you get extended from a moving average, price snaps back into it. Look where the 1 hour is. Okay. We get a red bar right here to get ignored. So, you guys know my rule of thumb. Draw a box around it. This becomes your area of value. Okay? Something in this box is going to pay you. You just need to be patient and wait for it. You need to be able to see it. Okay? So we draw a red box because we got a red bar that was ignored. Or we draw a box. Does that mean I get in? Not necessarily. I ask myself, what's the context? If I get in here, where does my stop need to go? It needs to literally go at the bottom of that red candle. If I entertain a long play here, I have to entertain a $1.50 pullback. I don't want to do that. Josh, why does your stop need to go here? Because I don't want price to stop me out here and then continue in my favor. That's not smart. We want to get into the market at the least vulnerable state. So I go, you know what? I might miss it. Because guys, this candle was completely green at one point. It looked like it was going to continue. But I was like, listen, it doesn't matter. I don't want to be vulnerable. And then what happened? We got a bunch of chop. We got chop, chop, chop. But I'm inside the area of value. Therefore, I'm waiting for a higher and tighter red bar to be ignored, which is what we got. Our red bar ignored, just like Todd was talking about. This candle was completely red, then sucks back up. Okay? That's telling you something. Context. We take a long play here. First target was EOD. So I took out half my position there, and then price sucked down and wiped me out. That's my fault. My stop loss should have been below the red candle that was ignored. Or it should have been below this candle. Or maybe even this candle. But it doesn't necessarily mean I had to keep it there. Right? Like, I made the decision that I didn't want to lose any more money. I didn't want to risk that much, so I sucked it up. Therefore, I'm vulnerable to getting wicked out. Okay? It's never the market's fault. You always are making a conscious decision to go, all right, where do I want my stop? Where do I want my target? That just happened. It is what it is. Was I a little frustrated? Yeah, a little bit. But then I was like, you know what? That's the market. It was still a good play. So I ended that day. Those are the trades I took. That guy. And I was like, you know what? Powell's speaking. I don't want to, leave myself in a vulnerable situation. And then came this day where we absolutely murdered the market. Red bar here, ignored. Off orb, okay? 15-minute open range breakout. No moving average cross here in the morning, but we were still using our 1 hour to identify healthy opportunity. Okay, we're bouncing here off pre-market high. Going to the market long, we're targeting 62751. No continuation. Stop out right here. So be it. Because we understand, listen, I don't want to hold, oh Josh, if you held, you would have got lucky. No, I would have programmed my mind to do inconsistent, irrational, bad decision-making process, right? Like, we don't want to get lucky. We don't want to hold and hope it comes back. Like, that's not why we're here. We want to get in, and if it doesn't go our way, get out. Like, that's it. And but it's still above the 50. No, it's not worth it, guys. Like, literally, I'm telling you, it's not worth it. Just let price do its thing, come back, and then we got this RBI right here. And we smoked this trade here for over 130%. It was just an absolute banger. And somebody asked me about holding trades. So this kind of goes back to what I was talking about on the day before. There has to be a level of acceptance where, yeah, you want that money that you're up, right? This is one of the main reasons I try extremely hard not to look at my profit. But, like, you want to go, all right, I'm in the market long right here. Right here, I was up like 30% already trading SPX, right? So I'm up like $300 right here. I actually took a trim right here. I was trading 2 SPX contracts. One right, and so I trimmed here, and then I took my next profit up here. I literally at target. So if you look at this, we get a red bar ignored. Look where the 1 hour trend is, okay? So let me just get rid of this. I really want you guys to see this. Because it's all about context. So if I get rid of the EMA cloud right here, okay. So now you can really see here. Look where the 1 hour is. The 1 hour is actually a little above price. So we're now going, is that bullish or bearish, right? That's if we get back above that, that's very bullish. So if I come over here and I whip out the 1 hour time frame, pull this here. Oh God. Oh God. All right, this day right here is 7/17. Okay, yep, right here. So the 1 hour, right? We're targeting 62751, which was literally a high from this day right here. Price action looks something like this. Looks like this. There we go. So look at the 1 hour. Look where the moving averages are. Okay? We're right on it. Now look at the 5-minute chart. And look what happened. Bunch of buyers got into the market long and got stomped out. Large money wanted their orders. They wanted their money. They pushed price down below, liquidated everybody. So now once I realized, I'm looking at the chart on the left, once I realize sellers are losing, my mind flips and goes, all right, we're headed to 62751. Like, I go long right here. I'm like, this is bullish. Then this happens. I'm like, oh shit, sellers are actually going to take it. I'm not going to get into the market, but I really think sellers got this here. Let's wait for our criteria, okay? Very extended from the 5-minute moving average. So a snapback is susceptible, okay? There's a very high chance of a snapback. We're 77 cents away from the moving average here. What happens? We suck back into the moving average. I'm still waiting for that moving average cross. We might get it, we might not. And then like right here on this candle is where sellers lost it, right? This is where this large red candle just got wiped out, right? Like this high couldn't hold. If like this was a high, this was a lower high. Now this is now it's higher than that, right? This is, buyers are showing strength right here. So when I see this candle, I'm like, okay, these sellers didn't do that well. How can I get in target 62751? So my mind's always like flip flop, right? Right here, bullish. Right here, I'm starting to get bearish. But look, we're below the 1 hour 9, but there's no criteria, so no trade. Okay. Oh, buyers just took this candle. Okay, I'm back bullish. We're back above the 1 hour. Give me a red bar ignored. And this was literally out of orb right here as well. So this was definitely like an area of value. And then I just longed the RBI right there. And then using the 5-minute trend, I was able to hold my remaining position all the way up until target. And the best way to do this, in my opinion, is what I always show you guys. When you enter right here off the RBI, you draw a box. You take your profit, you trim, but you continue to draw a box. Don't worry about holding all the way up to here. Just worry about holding your box, right? You have your red bar. This one gets ignored. Okay, hold. Look and just watch price. Don't watch the ticker. Don't watch your profit. Watch the moving averages and watch the candles. It rips up, comes in, literally tags the RBI, buyers show up. Close above the moving average. Right here, nothing, bam, get another red bar ignored, so I draw a box, okay? Price rallies up, oh, another red bar ignored, I draw a box, okay? That's a great way to do it. The other way is the 2-minute 20. This is the most valuable tool. Well, I don't want to say the most valuable, but this is as far as taking profit goes, this tool is incredible. Look at this. So we enter long right here. Boom. Rally up. Comes into the EMA cloud. Boom. Flies out of it. Rally up. Rally up. Rally up. Actually, it didn't really retest the 2-minute 20, but it was very clean market structure, 5-minute time frame. So that was a smoke show day right there. And just for I just want to point out here as well. Look what happened when we came back to the 1 hour 9. Okay, like it's literally. I'm not saying don't trade reversals, but I'll tell you this right now. Do not fight this 1 hour 9. Like this thing is very strong. Like it's literally a magnet, and when price comes back to it and you find opportunity out of it, like this got a little red bar ignored right here. It was a great long play. And especially later in the day, this is what I did on Tesla on Friday. Later in the day when you're just like it gets a little tighter, the 1 hour 9's like right there. That's when you really get these nice pushes. And then Friday, I kind of got in my head a little bit. I was kind of overthinking things. But I think we did a pretty good job. In the morning here, price was just very choppy. We did get a moving average cross off the open with a GBI. I didn't short that, and I'm really not that happy with myself about it. I should have went short right there. Just because there's no point not to follow your strategy, right? But maybe it was the live, or maybe, I just need to work down that a little bit more. But I just wanted to point out here to how it played out, right? Green bar ignored right here. We got this crazy wick. The main reason I didn't want to get in the market here is the moving average crosses happen back. I just don't like that, right? Mama always told me never trade a flat 50. I just don't like it, Todd, you told me that, right? Never trade the flat 50. Yeah, and you know what? It's okay. But one thing I want to say here is it's okay. Like the day before, I cleaned house. We made like $1,400 off this trade the day before. I'm not saying that's okay not to execute, but what I'm saying is you don't need, learn to not need to take a trade. Like, if you can look at price and be like, you know what? I just don't want to do it. Like, I don't like it. Like, build that relationship. Um,
yeah, if you had a good week and Friday comes and it's got to be super clean on Friday. I mean,
yeah,
you got to play defense on Friday.
Yeah.
If you had a good week, there ain't no sense of taking it unless it's super clean.
Yeah.
In my opinion.
Yeah.
That it was a little choppy, but that open print wick down. I mean,
did you trade that, Todd?
Yeah, I traded on. I traded it after that. I traded it after that on the 2 minute.
All right, show me.
GBI setup at 10:08.
Yeah.
I got in the 10:10 bar.
Oh.
But it was all off the open print when I seen that, because that was all green, and I just stopped in its tracks, and then the red bar came in. I was like, ooh, this is looking juiced. Just because of open print, the way it reacted there, that was my main thoughts on it.
And I want to point out here, I love how you use open print for the context. All right, this is orb. Okay, this is the 1045. Yeah, right here. Okay, so this is your open range. Look where Todd got in. Todd got in right here. So he's using open print to tell him the story. Okay, and then when we retest the orb and we get a clean GBI here, look where the 1 hour is. Bam. Beautiful short play. Yo, that was phenomenal. That was glorious. Great play right there. And using your tools to identify that healthy price action. Like, you know what I'm saying? Like, every day, use the tools. I took no trade. I should have long this here off Tesla. But it was just a little too, the risk, it was just too, I just felt a little vulnerable. It was just too, these candles were very large. So I stayed patient. Price came back into the, ready? Look guys, red bar ignored. What do? Draw a box around it. Price comes back to it. This Tesla trade was insane. I go long right here. I'm targeting 32945. I don't get it. I'm holding. Don't get it. Stopped out. I'm like, damn. I waited all this time on a Friday just to get stomped out? Or was I like, okay, let's see what happens next. I'm looking for a short. Don't take it because I don't want to fight these buyers here. Now ready? Let me pull up that 1 hour trend. Bam. Go long right here. Money shot. Same exact level. Same exact criteria. Okay? Red bar ignored in long here on Tesla. Targeting 32954 and targeting high of day. Boom. This thing took off like a bat out of hell. It was wild. In these Tesla contracts, it's insane. You literally could get these for like I think I paid like $88, and I ended up selling them for over $400 right here. Just a crazy move because it's 0 DTE, and it's a very volatile commodity, right? So this was just it was almost, what's the word, like surreal, but it isn't, because this is we've been trading like this for such a long time. Like, this happens so often. I literally took 4 trades this week that all met this exact same criteria. Later in the day, off a previous area of value, and right next to that 1 hour, clean red bar ignored, and this took off like a bat out of hell. It was crazy. I kind of held the bag on my last contract. I traded 5 contracts. I sold 4 right here, and I just left 1 runner. And I was like, oh, I want this 33118 level. And we almost got it, but then sellers just completely dominated right here. It had no legs. I think this one was the one with the 2 minute 20. Look at this. Yeah, it is. So I go long right there. 2 minute 20 becomes my stop. And just look here how she was just respected right here. Just bam, right? Like, look at this. Todd, don't we see this all the time, right? Look, We literally close on it. This scares tons of traders, and then boom, just rally right there off the 2-minute 20.